Hey, hi everyone. Hi. Hi, I've started the webinar slightly earlier so that I can make sure that everything's working fine. Hi, I see people joining already. Sorry, we're actually scheduled for 5:30, but I had to start a bit earlier to check if there's technical problems. Well, actually, I was checking for technical problems and I accidentally started it, so I guess we have to start a bit earlier today. Okay, just checking if you guys can hear me loud and clear, if you can see my screen, if everything's working. If it is, please let me know in the chat box. Say something in the chat box. Hi, testing. Okay, seems like everything is working. Give me like a minute to settle in, because I wasn't supposed to start so early. Okay, I am back. Okay, cool. Hi, hi. Okay, hi everyone. I'm gonna do the introduction while everyone, slowly gets comfortable and, make get into position. Okay, so hi everyone. Welcome to today's webinar brought to you by IC Markets Global. Okay, we're doing a live analysis session. Today's the 29th of September. This webinar is initially scheduled for 5:30, but I was checking for technical difficulties. I was checking to see if everything was working fine and I accidentally pressed start. So I guess we have started. Anyways, it's recorded, so if you come in at 5:30 and we're already halfway in, you can just look back at the recording. Okay, so cool. Yeah, so before we start, the usual, we need to get through the disclaimer. Hi, Buddha Lama. Hi. The audio stream's current bar is low and okay. Can you guys let me know if you can hear me loud and clear because it says on my side that the audio may be affected. This is why I accidentally started earlier because I was checking for like technical difficulties. I was checking if like everything was working fine, but right now it says the audio is not working fine. If you guys cannot hear me at any point of time throughout the webinar, just let me know so that I can do something about it. Okay, so in the meantime, I'm gonna go through the disclaimer. So this is a very important part of this webinar. Um, I'm gonna stay here for like a minute or two so you guys can read it. But basically, this disclaimer is just a reminder to tell you guys that everything I share today is purely educational. Nothing that I share is like of any kind of financial advice, investment advice, or any kind of signal to like buy or sell. And also a risk warning, trading forex and CFDs carries a high risk on your capital, to your capital, and you should only trade with money you can afford to lose. So it is purely your responsibility. Whatever trade you take is purely your responsibility. Please don't jump into anything I say today, because the whole point of IC Markets bringing these webinars to you guys is so that you guys can see a different perspective of how to do analysis and how to like how a different trader would trade. Okay, so I'm just showing a different perspective of how I usually do my analysis. If you want to follow my analysis on your own, that's up to you. If you don't, if you're just here to see how I do it, that's even better, because then you can like decipher what works for you and follow as you should. Follow if you've already done the work to back test that it works. Okay, so anyways, I'm gonna stay here for a minute or two so you guys can read through the disclaimer, and then we can start with today's session. Right. In the meantime, let me pull up TradingView. Okay, cool. I think everyone's done with the disclaimer, right? So let me start by introducing your host. Hi, Clinton. Okay, for those who don't already know me, my name is Cassandra. You can call me Cass. I am an investment analyst at Everest Fortune Group and a prop trader. So Everest Fortune Group is a research firm. Okay, we are the finalists for the best forex and equity research for multiple years running. What we do here is basically back tests. We chart a lot. We do a lot of forecasting. We study the markets a lot, and we study like strategies and to test it out to see if it works. Okay, other than that, I am a prop trader. For those who don't know what prop trading is, it means that I am a funded trader by different companies. To get funded, you need to pass a few tests. So the test that I passed, I had to do 10% profit within a 30 days period, which is actually 22 days because the weekends are not counted. Okay, so I had to do 10% within 22 working days, and I've done that multiple times, so I've been funded multiple times already. Okay, the whole point of me sharing this with you guys is so that you guys know that you are in good hands. I'm only going to share things that actually works for me. I'm not going to share things that I don't use. And again, please take this as a learning and a place to learn. Okay, please don't take this as a signals group or any kind of investment advice or any kind of like financial advice. Okay, I'm just showing you my perspective, my what I've learned, my own experience, but you need to decide whether it works for you or not. Okay, you need to decide whether it works for you. Okay, so our agenda for today is to go through the key approaches on the charts, and then before that we're gonna look at the cheat sheet checklist, and then we're gonna head to the charts. Okay, so this is the cheat sheet checklist that you guys can consider implementing into your analysis. So for me, there's gonna be a few questions that I ask myself every single time I go into charts. The first one is price going up or is price going down? okay, because I am a trend trader. So if price is going up, you want to get in for a buy. I mean, I would get in for a buy. I'm going to say everything with I because I don't want you guys to think that I am um giving you advice in any way, okay? I'm just sharing my style of trading and my style of doing analysis. How can I get to trade full time? Well, hi, Andres. Okay, how can you get to full time? I think the first thing you need to do is refine your skills. First, do back testing, see what works for you, become profitable first on your own account, and then later on, you can slowly, build your portfolio, and then hopefully it makes you enough to sustain your lifestyle, and then you can retire. Well, not retire, you're not really retiring, but you can like trade from anywhere. Okay, so trading is not really retiring, it is more like giving you the freedom to work from wherever you are. So you're still working, it's just that your work is trading. Okay. Okay, so I'm gonna ask myself if it's going up or down, because if it's going up, I want to enter for a buy. If it's going down, I want to enter for sell, because price is going up like this, I want to follow the trend and buy. If price is going down, I want to follow the trend and sell. Okay, so the first thing I do once I thank you so much. Once I've decided the trend, I can now use either a trend line or a channel. Okay, a trend line or a channel to like kind of like narrow down the trend that is going. Okay, so a trend line, you would need 3 touches. I'll show you guys later when we go to charts. And then a channel, you need 4 touches, 2 at the top and 2 at the bottom for it to be valid. Okay, once I am done deciphering where price is going, the next question that I ask myself is, now that I know that price is going up and I want to enter for a buy, the next question is, where do I enter for a buy? Where is my entry? Where is my stop loss? And where is my take profit? So how do I decipher that? I need to use horizontal levels. So these are pullbacks, overlaps, swing highs, swing lows, and Fibonacci levels. Okay, Fib levels. So once I'm done with that, I then now ask myself, are there any chart patterns like wedges, triangle, double top, double bottom? And then you can also use things like the moving average, 200 to 50. That's a very popular one. Or if you want, you can use a natural moving average. And then the next thing that I do is I use stochastics or RSI. Okay, so for stochastics and RSI, I'm basically looking for either a divergence, a bullish or bearish divergence, or I'm looking for bounce and reaction. That means I'm looking for support and resistance levels, okay, on the stochastics and the RSI. Okay, once I'm done with that, I also implement correlation into my analysis. So what do I mean by correlation? So let's say today you are charting on EUR USD, okay? You are buying the EUR. So if you want to buy the EUR USD, it means that you are buying this. The euro needs to go up in price, and the US dollar needs to drop in price. Okay, so how do I use correlations? Once I'm done doing my analysis on EUR USD, I can also do my analysis on DXY. So if my analysis on EUR USD is showing up, on DXY it should be showing down. Why? Okay, the DXY is the US dollar index chart. Okay, so you basically go and chart on the DXY to help you get a better view of what you're looking at. Other than that, you can use any strongly correlated assets class supporting or against your bias. So the first one, for example, is if you are trading anything to do with the Canadian dollars, you also want to look at oil. Why? Because Canada is a very big producer of oil. Okay, so if Canadian dollars goes up in prices, usually the price of oil also goes up in prices. If oil prices drops, usually Canadian dollars will drop as well. Okay, other things is using major currency pairs across to do correlation. So Australian dollars is quite closely correlated to the New Zealand dollars. Usually if one currency is going up, the other currency is also going up. if it's going down, the other currency is also going down. Okay, so once I'm done with all of this, I've used all of this to do my analysis. Usually I will then decide if I'm going in for a reversal or a breakout. Okay, so for a reversal, I'm going to use Fibonacci confluences, retracements, extension, expansions, projection to find supporting levels for my reversal. And for my breakout, I just need to follow trend and see if there's any break of structure. But if you guys have followed me for a long time, you know that I'm usually a reversal trader. I don't really like to play the breakout because you know how like for breakouts, it does this. It breaks out and then come and retest, right? It comes and retest, but the retest ends up like becoming a fake out sometimes before it continues up. So that's why I don't really like playing the breakout, but you can if you want to. Again, whatever I'm sharing with you guys today is purely my own, yeah, purely my own style of trading and my own, it's just from my point of view, but please only follow it if you've done your back testing. Okay, next. Okay, thank you from IC Markets Global. We're done with that. I'm gonna go straight into the charts and then we can do some analysis for today. Okay, let's just review some of the things that we looked at last week. Okay, so this is one that we looked at last week. I did not get into this, by the way, but it did not work out. So I am very transparent and honest with you guys in this webinars. I don't want you to think that I'm scamming you guys or like at any point of time I'm making myself look better than I am. I'm not, okay? I'm just very transparent. So we did this analysis last week on Monday, and as you guys can see, it did not work out. Okay, you guys can see here that it did not work out. Okay, so the analysis was to get in at either A or B, but you can see that price broke through A and B. And I hope none of you got in, because I personally did not get in, by the way, because I know every time I give you guys an analysis, if I share an analysis, I will always say to wait for the reversal pattern candlesticks to form. Okay, so if we zoom in, you would see that there was no entry at all. You would see that there was no entry. Okay, so price came here and it just shot through this area, and this is already a sign that there is no entry, because even the candlesticks are telling you that, okay, there is no reversal. The downwards trend at this current point of time is very strong and it's not going to suddenly bounce out of nowhere. When the reversal pattern finally form, we are already at our stop loss, so that doesn't make sense to get in, right? So there was definitely no entry at A. And when price came to B, you can see this very long candlestick shooting through as well. You can see this very, very long candlestick shooting through as well. And therefore, there was no entry. So we did this analysis last week. Sorry, I did this analysis last week. You guys saw me do this analysis last week and it didn't work out. And that's okay. Because if you follow the rule closely, there was no entry anyways. Okay, because the rule is always the last thing, the last line of defense is to wait for the reversal pattern candlestick. Okay, you need to wait for the reversal pattern candlestick. That is your last line of defense to get in for a buy or a sell. I did not get into this because actually I was, to be very frank with you guys, I was busy, so I didn't put any order to get in. I also didn't look at the charts to get in. Okay, that's okay. It's okay. I'm gonna get rid of this. This did not work out. Okay, another one that we did on let me see. I took you guys last Wednesday. I took you guys on Mondays, right? But then on Wednesday, Peggy could not log in. She was having like Wi-Fi issues or like some connection issues. So I covered her webinar on Wednesday. And on Wednesday, you guys saw that we did, for those who attended the Wednesday one, I remember Clinton being there. Andres, I remember seeing you there as well. Buddha Lama, were you there? I'm not sure. But anyways, I was just covering Peggy on Wednesday and we did an analysis for EUR USD. Okay, this is one trade that I actually got in on. Okay, this is one trade that I actually got in on this trade. but we can now review it together. Wait, what is going on? Okay, there you go. So last week when I did this for you guys on Wednesday, hi UK Gamer, you were there as well, I remember. Okay, when we did this analysis last week on Wednesday, we're basically just doing a review right now. I said that the entry should be somewhere around here. Here. I was aiming for my entry to be somewhere around here, right? Because that's where the trend line and the horizontal level meet. So this was my entry. But as you can see, guys, I'm being very transparent, by the way. If I lose trades, I will tell you that I lose trades. I'm not going to tell you that I won the trade. Okay, because then that's not realistic. I don't want you guys to have an expectation that if someone is a professional trader, they're going to get it right all the time. I don't get it right all the time, and this is an example where I didn't get it right. So last week I actually had a loss of negative 1%, okay, of my $300,000 account. Actually, it's way more than that, but anyways, I had a $3,000 loss, which was 1% because I don't risk anything more than 1%. Okay, so this was the trade from last week, and it didn't work out because this is the entry and then this is the take profit. And the stop loss, I remember, I don't know exactly, but I think it's somewhere around here. But anyways, if we play the charts, we can see that price just broke through the entry, and then now this is where price is. Okay, so I didn't even follow my own rules because last week when I saw this, to me, it was a high probability setup. Okay, this was a high probability setup and everything was showing me to get in for a buy here. Okay, so I got in, I placed a buy order last week. I placed it here at 1735. Okay, 1735. I placed my buy order at 1735. I didn't look at the charts anymore. By the next time I looked at my charts, I got stopped out already. Okay, this is a bad practice again. The best thing you should do is wait for price to get here and then wait for the reversal pattern candlesticks. In this case, there was a reversal pattern candlestick. Okay, there was. So do you see these three green candles here? This 1, 2, 3 green candles. This 3 green candles, if I'm not mistaken, is a reversal pattern candlesticks. So it's called a three white soldier. Three white soldier. Okay, so there was already signs of reversal, but anyways, it ended up being fake and it still continued down and there was a stop loss. It hit my stop loss. So that's okay. Sometimes everything can be showing you yes, but you still end up wrong and there's nothing you can do about it. All you can do is just reanalyze and hope for the best the next time. Okay, so right now, last week was one of my losses. I haven't had a loss in a while actually. So last week, one of my losses. Let's do another one today. You guys can see EUR and EUR USD and GBP USD, they look the same. Do you see this long wick here, long wick here, downwards movement. Okay, they are very closely related because the euro and the British pound is quite like they're fairly closely related but not exactly. So I'm only gonna chart on one of it and then the other one we can look at something else together. Okay, so let's start with sorry. Okay, let's do one forex pair, one cryptocurrency. Oh, this is another one that didn't work. I didn't get into this, by the way. Okay, one forex pair, one cryptocurrency, and one commodity. So that's EUR, USD, ETH, USD, and gold. Okay, let's reanalyze gold again. Wow, gold is shooting up like crazy. Do you guys see a correlation that is happening here? Usually, if cryptocurrency is going down, gold prices will go up. Okay? Usually, if cryptocurrency goes down, gold prices will go up. Why? This is another example of correlation. Why? Because cryptocurrency is considered a risky asset and gold is considered a safe haven asset. So it's, inversely related. Hi Cassandra, may I ask what time frames are used for scalping, intraday trading, and swing trading? I'm still confused about which time frame to use when trading to find confirmation candles. Okay, hi Tugas. You need to decide first of all if you want to be a scalper, a day trader, or a swing trader. So if you are a swing trader, you can look from anywhere from weekly, daily to 4 hours. If you are a day trader, I usually look at the daily, the 4 hours, and the 1 hour. And if you are a scalper, you can look at the 1 hour, 15 minutes, and 5 minutes. Okay, so what kind of trader you want to be depends on your lifestyle. Hi AJ. It depends on your lifestyle. It really depends on your lifestyle. Because if you're someone who is very busy, it's impossible for you to be a scalper because you can't be sitting in front of the computer all day, every day looking at the charts. But if you're a swing trader, I'm more of a day trader to a swing trader because I look at the charts, but not every day, maybe a few times a week. Maybe like 3 days in a week I'm looking at the charts, but the other 4 days I'm not really looking at the charts. So I don't really look at the charts on Thursdays and Fridays. I'm only on the charts on Monday to Wednesday. So I'm more of a day trader to a swing trader. So I look at if I'm day trading, I look at the daily, the 4 hours, and the 1 hour. If I'm swing trading, I reference the weekly, the daily, and then the 4 hours. Okay, so let's start with Ethereum. Sorry, EURUSD. Let's start with the weekly actually. So, hi Jamilu. Okay, so one thing you guys want to take note of, and I totally can understand why Ethereum, EURUSD and GBPUSD actually did a reversal instead of going up. Okay, because we've already reached a resistance on the weekly. Okay, by the way, when you're looking at different time frames, the weekly, the higher the time frame, the stronger the structure. Okay, the higher the time frame, the stronger the structure. Okay, so it's going to be very hard for price to break a resistance on a weekly charts versus breaking a resistance on a 1 minute chart, by the way. Okay, this is just an example. Okay, so on the weekly, I'm just like deciphering what I did wrong last week because I'm sharing with you guys that, but I want full transparency. So I did have a loss last week and my loss was on EURUSD. I called for a buy for EURUSD. I got in for the buy and I got stopped out. I lost 1% last week. Okay, so now I'm reviewing why I lost that 1%. This is what you should do every week. You should do your analysis. You should get into your trade. Whether you win or you lose, you need to come back and review that trade. Okay, so I lost that trade and now I'm starting to understand why. Because on the weekly, we have already reached a resistance and therefore it's expected for price to reverse from here. Okay, it is expected for price to reverse from here because we've already reached a resistance on the weekly. Okay, so that's one thing to take note of. This is a trend line, by the way. You need 3 touches. 1, 2, 3, 4 touches. We're at the fourth touch now, and price is expected to reverse. So even though everything is showing us a buy on the smaller time frames, we need to take note that on the bigger time frame, it is kind of indicating a sell because of the resistance. So let's go to the daily to see what we have. I'm going to just highlight some swing highs and swing lows. This was a break of structure, by the way. Price broke up and then came back down. This is called a fake out. Okay, this is a fake out. This is a fake out. Is price going to continue moving down or up? Right now, I'm kind of biased of price going down. Okay, so let's just put down our reasons. There is a trend line breakout here. Do you guys see that? Very clean trend line breakout. So I guess I would say I was unlucky because price came here one time, two times, three times, four times. And on the fifth time, I expected price to bounce again, but on the fifth time, it broke out instead. So four times it bounced, and one time it break out. I so happened to catch the one where it was the breakout. Okay, that's just my luck, I guess. That's just my luck. But then again, if I saw this on the weekly, if I had saw this trend line on the weekly, I might have reconsidered that buy. Okay, so this is showing me we have signs of selling here. Signs of selling. Now price is starting to make a downwards trend. So let's look for a sell instead. Okay, I'm just following here. Okay, and then hoping to catch the sell from here. I'm hoping to catch the sell from here. Okay, so price, how do I catch the sell from here? I know right now I want to get in for a sell. I already know I want to get in for a sell. My next question is, hi Chris. Okay, my next question is, I know I want to get in for a sell. Where do I get in for the sell? Wait, let me bring my box back so that we don't lose sight of our aim for today. Okay, so my aim is to get in for a sell. Price is currently here. I need to identify the closest swing high and swing low. So this is the closest swing low here. The closest swing high is either this or this one. So one of it is going to be my sell entry. Okay, one of it is going to be my sell entry. I don't know which one, but yes. Let me try to connect to see which one is the stronger one. What am I doing? I'm just connecting to see how many times price came here and rejected this area. Only one time. If I pull it across, yes, there's like, you can say it's three times. You can say price came here one time, two times, but then here there was a fake out. So price didn't really respect it. Four time, and then it broke again. So it broke again, and I guess it kind of respected here, and it respected here before breaking up. Okay, so I would say there is some kind of resistance happening here, but it's not a very strong one. You want things that are very strong so that your entry can be very strong. Okay, so let me look for one. Because the horizontal levels are not giving me I cannot find a very strong level when I pull out the horizontal level. So now what I'm going to do is I'm just highlighting a zone, by the way. Okay, so price came here, came to the zone one time, two times, didn't respect this time. Four times, three times, four times, and five times, and then it broke. So there's definitely something going on here, but I need it to be stronger. Yes, even the 4 hours has a change of structure. Yep, I'm a little bit more biased that the sell has started already. Okay, now let's pull some Fibonacci levels to see which level. Okay, I'm gonna get rid of everything. Fibonacci retracement, we're only looking at 5 levels. 23.6, 38.2, 50%, 61.8%, 78.2. 23.6 is not relevant to us anymore because price already cut through it, so we're going to get rid of it. What is Fibonacci? Fibonacci levels are basically the levels that you think price is going to go and reject off. 61.8 is always the favorite. It is the golden ratio. Okay, this is the level that price likes to go to, but not all the time. Sometimes it just reverses at 38.2. Sometimes it reverses at 50%. But basically right now we're trying to see which level, okay, it's more likely to reverse off. Okay, so let me pull up more Fibonacci levels. I'm taking from this swing high here. Getting rid of this, getting rid of this. Wait, 50%. Okay, I'm gonna change the color of this so that you know this is from a different swing high. Wait, how do I change the color? There you go. Okay, so my idea is to get in for the sell in the level where the most Fibonacci levels are lining up. Okay, so the more Fibonacci level lining up in the same spot, that will give me more confidence to get in there for a buy or sell. So right now I'm going to take this zigzag and pull a Fibonacci projection. Fibonacci projection, we're looking at 78.6. 100, 127, and 161.8. And then I also want to change the color so that changes to red. Okay. Okay, nothing on the 78.6. We're gonna get rid of that. 100%, 127.2, 161.8. Nothing at the 161.8. Gonna get rid of this. I'm trying to keep the chart as clean as possible. I know it's very hard. Okay, give me a moment, guys. Okay, narrowing down the entries. Give me a moment. Don't think it's gonna be the 61.8. There's only one level lining up there. Okay, I'm gonna get rid of all the Fibonacci levels because it's looking quite messy right now. Or rather, let me just hide the background. Wait, what did I do? I'm trying to like visible. I'm trying to like. Okay, so I've narrowed down the entries that I think where price is gonna reverse off A, B, and C. Sorry, C. Okay, so I think price is gonna come to one of this level and then reverse off it. I'm just not sure. I now just need to see which one makes the most sense. Okay, so give me a moment. That's basically your job as a trader. Your job as a trader is to find support and resistance zone, key levels, and then these key levels are going to be your entry. Why is it so important to find these key levels? Because you're narrowing the location of where the action is going to happen. So I'll give you guys an example. Let's say country A and country B are going to war. So they're marching against towards each other. So they're going to march towards this location here. And somewhere in this location, this is where the battle is going to happen. So it's basically, it's basically the buyers and the sellers. Okay, so the buyers and the sellers are going to march to one location, and then when the battle happens, then we're going to know if the buyers are winning or the sellers are winning. So I think the action, right, the action is going to happen either here at A, B, or C. Okay, I think the action is going to happen here, and I'm more likely to believe that the sellers are going to win. So in either A, B, or C, I want to enter for a sell. Right now, I just need to narrow down whether it's going to be A, B, or C. So sorry, I'm getting rid of all of this. We want to keep the chart as clean as possible because we don't want to get confused. We don't want to get brain fog from like a messy chart. So I know that I have a feeling the action is going to happen in A, B, and C. I just don't know where in A, B, and C is it going to happen. So give me a moment. It could be A because there's already reversal pattern. There's already a reversal. This this spinning top. Bullish. Is this a pin bar or a spinning top, guys? That's actually a sign of a reversal. Honestly, it could just be A. It could be A because this is a waning buyer control. The pattern has a multiple red body. I just want to confirm. Okay. This candlestick is giving me, do you see bearish this bearish spinning top? It is a sign that, right, we all read it. It is a pattern that suggests the previous strong uptrend moment is losing steam. Okay, anyways, I'm gonna pull out other things to confirm. Yeah, it really could still be A, B, or C. Not Ichimoku is not helping. I'm quite confident. I am quite confident that the sell is going to happen at A, B, or C. I'm not sure if it's gonna be A, B, or C. Hold on, guys. Trying to pull out as many things that I can to narrow down whether it's going to be A, B, or C. Okay, if I had to come up with an analysis, I don't think it's going to be C. Okay, I don't think it's going to be C. Why? Because there's nothing at C. There's no horizontal levels at C. Okay, there's no swing high, there's no swing low, there's just random touching here, and there's one swing high here that happened a long time ago. Okay, so I don't think it's going to be C, so I think it's going to be A or B. If it's A, that means it's right now. It was like now. If it's A, it means that this trade is over. Like we didn't get into this trade. Okay, I think it's going to be B. Okay, why do I think it's going to be B? Okay, so I don't know if you guys have ever joined my webinar where I was teaching about smart money and like ICT trading. So ICT is the, I'm sorry, I can't remember what it stands for. Okay, so inner circle trader. Okay, so inner circle trader is basically a style of a method of trading or a kind of strategy. Okay, so there was a break of structure here. You guys can see that there was a swing low here, right? So there was a break of structure here. There was a break of structure. Usually when there's a break of structure, price tends to go to the last swing high or the last swing low. So the last swing high was here where B is. Okay, the last swing high was here where B is. So although price could just reverse right now, I just have a feeling there's a chance it's going to be B. So because of that reason, I'm going to put my entry at B, my sell entry at B. Okay, if price just reverses right now, then that means I'm wrong and that's okay. That means I don't get into the trade and that's okay. It's it's better if I don't get in a trade, I don't lose anything, right? So I think it could be right now. Entry could be right now. Okay, so I'm aiming for B, therefore my sell entry is going to be here. Take stop loss is going to be here. And my take profit is going to be here. Okay, so that's what it is. So bias of sell, just not very like very confident. Okay, so that's all I can say. Let me see. Oh, nice. Yeah, I'm definitely more biased. I'm definitely more biased of it being B. Okay. I've like I'm just not confident price will reach. Okay, so I think the entry is here. I think B is the entry. Could be A, could be C, but my favorite, my bet will be this. So I'm hoping it does this day, then before doing this. Okay, so then, okay, the short position will be a 1 to 4 trade. Very nice, very clean, very high, very good risk to reward. Yeah, it's a very good risk to reward trade, and I will be, more than happy if this works out, because for me, if I lose this trade, I will lose 1%. Okay, but if I win this trade, I will win 4%. So I don't know, I'm very happy with this kind of odds. It's just that I don't know if price will even get here. Okay, so far things are supporting the analysis. If I pull out Ichimoku right now, you can see that if price got here and reversed here, it will be perfect. Okay, for those who knows how to use Ichimoku, you know that Ichimoku, this cloud here, works as a form of resistance. Okay, so it works as a form of resistance if you, I mean, it's the best if you put it the stop loss way above the cloud. Okay, you can see it's a very strong red cloud as well, which is an indication of the trend right now. Okay, it's an indication of a trend. If you put it about slightly higher, a bit higher to avoid the cloud, it's still a really good risk to reward ratio. Still 1 to 3, about 1 to 3. That's still a really good risk to reward ratio. Okay, so this is what I have for Ethereum, oh sorry, EURUSD. I think this is a good setup. I think it's a good trade. I just don't know if it will reach here. I just don't know. I just not very confident price will reach entry. Okay, that's what it is. We will review this next Monday. Okay, we're gonna review this on Monday. Hopefully it works out. If it doesn't work out, that's totally fine. By the way, you don't want to aim at the bottom. You can put the stop loss, take profit a bit higher. Risk to reward will still be okay, but chances of it getting to your take profit is much higher. Okay, so this is what I have for EURUSD. I just hope it works. I hope that price gets here. Remember, when price gets here, you do want to look for a reversal pattern candlestick. Look for a reversal pattern candlestick before entering. I might not wait for the reversal pattern candlesticks because I don't know if I'm going to be on the charts that time. So for me, I'm going to put a sell order. Okay, I'm gonna take the risk and put a sell order instead. But the best practice is to wait for the reversal pattern candlestick. Okay, that is the best practice. Okay, let's look at Ethereum. Okay, so I think Ethereum is doing an ABC. Right? I think, where is it? There. I think Ethereum is doing an ABC right now. For those who don't know what I'm doing, it's basically Elliott wave. Okay, rules for ABC of Elliott wave. Blah 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 blah. 535 ABC multiple. By the way, guys, I'm always referencing because I don't remember. And you know, you're not expected to remember. The rule is a 535 pattern. So let's see if there's a 535 pattern. Okay, so let me see if there's a 535. 1, 2, 3, 4, 5. Very clean 535 there, followed by a 3, which is a B, C, and then this should be a 5. Should be a 5. 1, 2, 3, 4, 5. Okay. Looks pretty clean. This could be the end of it, but I'm not sure. I'm using Elliott wave, okay, for this one. I'm not using this style where I'm not using this for Ethereum. For Ethereum and gold, I like to use Elliott wave, which is basically another style of doing analysis, okay? It's basically another style of doing analysis. Okay, so I think if ABC has ended, then this could be an uptrend already. This could be a start of uptrend if it's not ended. I would like some advice okay, if you're a beginner, please master trading psychology first before you do anything. I've previously studied market structure, trend lines, support and resistance, breakout, pullback, Fibonacci, various indicators, orders, blah blah blah, book candles. I don't know which strategy to use. Sometimes using multiple strategies makes me confused and learning too much strategies. I'd like to take some. Okay, the answer to this is what I tell everybody. If you are not profitable in trading, there can only be one reason. The reason is you are not spending time back testing. Okay, you are not spending enough time back testing. If you are back testing, then you will know if your strategy is working. I'll give you an example of back testing. Okay, let's say right now, let's just randomly, okay, give me one trading strategy, just randomly. A range trading strategy is where the traders identify security trading between two prices. Okay, range trading is basically this, right? Basically range, and then you wait for a breakout, and then, okay, let's just come up with a random strategy right now. Okay, you identify a range. When there is a breakout, when there's a retest that happens, you get in for a sell. Okay, so this is just a strategy that we are randomly going to identify. Okay, so now let's do back testing. Okay, so I've identified a range here. I'm gonna use this replay button. I'm gonna cut this. So I've identified a range. So remember the strategy that we've decided to follow is breakout. Every time price ranges, after a breakout, I will enter for a buy or sell in the direction of the breakout. The only reason you are not profitable in trading is because you are not putting in the time to do back testing. Okay, so this is an example. Okay, so I've already identified a range here. So there is a range. So remember the rule is every time price ranges after a breakout, I will enter for a buy or a sell in the direction of the breakout. Okay, so price is going to range here. So based on this, if price breaks out here, I'm going to enter for a buy. If price breaks out here, I'm going to enter for a sell. Okay, so now I press play. I don't know what's happening. Okay, a breakout happened here. A breakout happened here. So right now, I'm going to enter for a buy here. Okay, so then you need to make up rules and you need to follow a strategy. After a breakout happens, what do? Do you wait for a retest? Where is your take profit? Where is your stop loss? Okay, so you basically come up with the rules, or you've copied a strategy you find online, whatever it is, and then you do the back testing, and then you do the back testing 10 times. So now you get in for a buy. So your rule is that I'm going to get in for a buy every time there's a breakout. My take profit is going to be the last swing high. So the last swing high was here. Okay, my take profit is going to be here. My stop loss is going to be here, below the range. Okay, so the strategy that you're going to follow, that every time it breaks out, you're going to enter for buy or sell. Your take profit, or your take profit is going to be the last swing high or the last swing low, and then your stop loss is going to be under the range. Okay, so let's see if it worked out. It didn't work out. Okay, price hit your stop loss. So this strategy, 1 out of 1 time, was wrong. Okay, how do you do this? You test 100 times. If your strategy works 70 out of 100 times, then it is a solid strategy and you continue using that strategy. Okay, that's basically how you become profitable in trading. Okay, so that didn't work. Now I need to go back in time and look for another ranging. Okay, there's another one here. Okay, you can see, sorry, let's just go a bit further back. Okay, you're here right now. You don't know what's gonna happen. Okay, you are basically here right now and you don't know what's going to happen. You see price ranging. Okay, you see price ranging. You tell yourself, you follow back this same strategy that you wanted to follow, which is the breakout strategy. Okay, so when price does a breakout, you enter for a buy or a sell. Okay, so you wait. Okay, a breakout happened. I'm gonna enter here for a buy. My stop loss is gonna be here. My take profit is going to be here, whatever it is. Okay, and then you continue playing it. Okay, price hits your stop loss. Okay, so 2 out of 2 times the strategy was wrong. So you do this 100 times. If the strategy works, you continue using the strategy. If it doesn't work, what do? Give me another trading strategy. Okay, give me another strategy that works. Okay, just randomly go anywhere and ask for what is the most trend trading. This is also a trend, blah, 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 blah. Okay, whatever it is. And then you back test to see if it works. If it's wrong so many times, what do? You don't use this strategy. So why are you learning so many things? I previously study structure, trend line, support, resistance, support, breakout, pullbacks, Fibonacci. Whatever that you have learned, SMC, ICT, whatever that you have learned, you need to go and back test to see if it's working. If it is working, you continue using it. If it's not working, stop using it and try a different strategy until you find a strategy that works, and that's how you're going to make money. So why do I use Okay, see, for EURUSD, I use trend lines, I use support resistance, I use Fibonacci, I use Ichimoku, I use RSI, I use stochastics. Why? Because in the past, when I back tested EURUSD, this is what worked. This is what worked for me when I use EURUSD. Why, when I trade ETHUSD, why do I not use support and resistance? Why do I not use trend lines? Why do I not use Ichimoku, blah, blah, blah? Because when I back tested on ETHUSD, those things did not work for me. So what you have to do for trading is find a strategy, find a currency pair, a forex pair, whatever pair it is you want to trade, back test on that chart and see if it works. If it doesn't work, you either change the pair and try the strategy on a different pair, or you change your strategy and try a back test your strategy. So basically the answer is to back test. If you are losing money in trading, it's only because you are not back testing enough. You need to back test. Okay, how to win in trading? Back test strategy that works until you find one that works, and risk to reward. You need to master risk to reward. That's all it is to trading. If you can do this too, I can promise you your losing will start to decrease and your winnings will increase a lot more. Okay, so that's all I have for you guys. Sorry, I only went through one chart today. I cannot really chart Ethereum today because it would need me to do Elliott wave, which would take a bit of time. So my only analysis for today is basically EURUSD. I'm hoping it pulls back to here, and then here I'm going to enter for a sell. But if it doesn't pull back to here, then that's okay. It means that I don't have a trade. Okay, it means that I don't have a trade and I do not want to force a trade. It means that this is the structure. Okay, it means that this is the trend line that price wants to respect. If price pulls back to here, means that this is the trend line that price wants to respect. Okay, so I'm hoping it pulls back to my blue line here, and then here it reverses. That's the best case scenario. If it doesn't, it's okay. I'll just consider that I didn't get on this trade, and I can come back and do another analysis at another point of time. Okay, so that's all I have for you guys today. Take care, guys. Thanks, guys, for joining. Thanks for interacting with me. Thanks, Buddha, Clinton, Andres, Tugas, UK Glamour, AJ, Jamilu, Chris. Good luck, everyone. I hope you guys become profitable in trading if you are not already. If you are profitable in trading, I hope you continue to be profitable. Okay, again, reminder, the point of this webinar is to show you a different perspective from a different trader, a different style from a different trader. It is not a signals group, so please do not get into my trade unless you know, you believe in it. And but again, every trade that you take is your own responsibility. Okay, so for those who are still losing in trading, it's only because you are not back testing enough. You need to back test. The answer to winning is backtest, backtest, and backtest. Not backtesting in trading is the same as wanting to join a weightlifting competition without going to the gym. Okay, backtesting is you going to the gym. If you backtest enough, you are going to start recognizing patterns. You start seeing things on the charts that you previously did not see. Okay, so you need to backtest, backtest, backtest before you become profitable. That's all I have for you guys. Take care, guys. Bye. See you guys in a week. Bye.